Very good evening, everyone. Charles here, Frgnt Daily Chart Analysis. The time is 5:15 local here in Milan, Wednesday the 6th of May, 2026. And the day thus far is pretty much going to plan. To be quite honest, US dollar CAD is finally going to the overall plan of the week. If we head over to, I know you guys love this, the chart analysis. Where do we start? So US dollar CAD this morning, I had a cheeky bite at US dollar CAD prior London Open, to be quite honest, and that trade triggered me out break even. And since then, I have, of course, re-entered US dollar CAD. However, if I take you slightly further back, let's have a look just here. US dollar CAD, even when price had moved away, I was still pretty confident that price would eventually come back. You can see this was yesterday, looking for price to return back to that 4-hour order block, refined 15 for that long position. Let's see if we can go even further back to understand how far in advance are we looking to detail price and anticipate price coming back. At this time, we only had the 4-hour order block to play with. Anything going on there? Not really. So I was waiting for, in fact, that's pretty good, waiting for a break of that structure. We had the break of structure, and I guess here around this area is where the order block now lies. Anyway, you get the picture. Prior planning always allows for very easy execution. And that is evident as a result of this trade now, which I hope to say is more than likely going to take profit. I'm already above 3%, therefore I will be closing that trade out by the 4-hour 50 MA, probably even before price gets there. The job has pretty much been done in terms of the analysis that I've just shown you guys over the course of the week. And just a little rundown, to be honest, because US dollar CAD really was a position that I had been focusing on for a multitude of reasons. We can look to the weekly time frame first and foremost. Well, we don't really get too much information from the weekly by way of looking for a long position. So the catalyst at the moment is understanding what's going on in the DXY. But if we stay with US dollar CAD for a moment and give the pair the flowers of which it deserves, we can see price had come into this daily order block right down at the lows. And the question that I always get is, well, Charles, why that order block? And that is the lowest order block in and around the area that I'm looking in terms of most recent price action. And now the importance of that order block is, if we look at price action on that daily time frame, we can see that price had made a low, potential lower high, failed to make a lower low. At this stage, we hadn't made a higher high, but price started to step up. So as a result of this move now, creating multiple breaks of structure, and also, as you can see, by this illustration here, I foresaw this move in the market as breaking overall structure. Now, those of you that know how I trade recognize that I don't often go into that level of detail in terms of structure and price action on the higher time frames, such as the daily and the weekly. But more importantly, when it is gleamingly obvious, you have to take it into consideration, because I want to validate this order block and understand, well, why should I be looking for a long position from it as a result of price? Actually, if I bring you to the 4-hour in a moment, price is incredibly bearish. Therefore, I need to get a lot of confidence, or have some confidence in the area before looking to take that position. Now, the confluence at the moment is the fact of that daily order block, as well as that, the overwhelmingly long bias that we have on the DXY. The DXY is, of course, in the lowest weekly order block, lowest daily order block. Again, that had most recently broke structure points to the highs. Therefore, returning back, I'm looking for a reaction, not necessarily going to take me up to create a higher high, but all I need on the DXY is a reaction, of which we're getting now. And that reaction is enough to push US dollar CAD up to those highs. So back to US dollar CAD, as I said, to give the pair the flowers that it deserves. Now, on the 4-hour time frame, what often, or more often than not, some traders aren't able to really depict and understand that although we are looking bearish on the 4-hour time frame, why can we come to the conclusion then to take a long position? Now, first and foremost, once this daily order block had been refined down, as I showed you on the analysis that was done a couple of days ago, we refined that order block down and we came to this 4-hour time frame. Now, again, the question you asked, why this 4-hour order block? Well, this 4-hour order block, again, was the lowest 4-hour order block refined within this daily order block that I was looking to manipulate. Now, giving the credit to that 4-hour order block, then the question is, well, what did that 4-hour order block do in order for you to have the confidence that when price was to return into that area, there would be some liquidity coming out of that area? Now, as we can see again to the left hand side, price had been making lower lows, failed to make that lower high, price then push up, create a higher low, followed by a new high in the market, again breaking structure points to the left. Therefore, when price returns back to this 4-hour order block, I am then looking for a reaction. The first thing we then had was a bit of consolidation in the market, and I remember saying I would just like this area in the market to be broken. Once that area is broken, just the basics of price action, I'll be expecting a push, a pullback hopefully into an area of imbalance left behind, followed by my trade that's now been executed. As you can see, again, the order block that I've used. The question I get a lot is why that order block? Well, again, it was the only remaining order block in the leg that contributed to that break of structure. Of course, there was an order block here, but price tapped into it, meaning it was mitigated, also meaning that there was no real reason for price to actually want to return back to that order block. So what I did, restart the process, 4-hour order block, price came in, and then it's up to me at that stage to look for my entry and confirmation before looking to get into that position. If we start to roll on ever so slightly to the right hand side again, I wanted to come with a bit of a fresher mind. So from Monday, looking for a new order block potentially to be selected. As a result of this daily candle closure on Monday, the 4th of May, we're then able to restart the process, allowing or giving way for price potentially to return slightly lower. And once we refine this daily order block down that was created as a result of this daily bullish candle on the 4th of May, then here we are in and around this area at the moment, currently trading out of that daily, newest daily order block. That must be said, is once that order block is still refined, that 4-hour order block is very much so still valid as a result of price not failing to break below. So essentially, I'm expecting price to, as I've said, make that higher low, followed by a higher high continuation. Now, the only hurdle that we have that could stop price actually making and fulfilling the overall bias in terms of price making that higher high is the 4-hour 50 EMA. And then you ask me again, well, Charles, why are you concerned with the 4-hour 50 EMA? If I show you the 4-hour time frame and I'll ask it rhetorically, as you can see, as price is coming down, printing those lower lows and lower highs, price is respecting that 4-hour 50 EMA. So just because I'm in a long position, and of course I've identified a higher time frame 4-hour order block on the same chart that you can see in line with a structure point, a key structure area, the question now I have to ask myself is, well, do I trust the facts in the market, i.e. what the 4-hour 50 EMA has consistently been doing, or do I just trust what I want price to do, which would of course move further higher to a 1 to 6, as opposed to, let's call it a 1 to 3, that I'm most likely looking to close that position out at some point soon. And then in line with that, what we can see to support my overall bias in understanding that the overall direction on the 4-hour is very much so still bearish as a result of understanding, well, low in the market, lower high, a lower low technically has been created. So this, in essence, could have been a lower high for a lower low continuation. Hence why my entry technique here, I needed to wait for a lot of validation before really wanting to take that position. Now, the validation I had this morning was based on the DXY, and the re-entry of that position also was based on the DXY. Also, in addition to that, what you can see is those green areas, which I have explained to those in my community that would be the better way, or I would say the best way to take that trade long. However, we always discuss the worst case scenario, and if we move this structure point slightly down as a result of that's how I took that position, I'll bring the 15-minute time frame up for you to see that slightly bigger. What we can see is price moved off from that 15-minute order block, or before that 15-minute order block was created. What we had in the market, as you can see, one line would often do it. That's the line there, and then we've had price push up and break as a result of this bullish candle closure on the 15-minute. What had then happened, as you can see, as a result of this bullish engulfing candle, or just a bullish candle, we had a 15-minute order block left behind. That, thankfully, price came right back into it, and that was my entry. So that is the rundown of today's plays, to be honest. So 2 trades taken, one of which US dollar CAD, pre-London Open, just in the latter stages of Asia. That was a break-even trade, and this current position, which once I finish with this video, then I will probably close that out and be happy for a 3% return on the investment today. So I hope that breakdown was helpful in some way or another, just depicting the higher time frame bias, refining those areas down, ensuring then you have the confirmation by way of price breaking structure points, even on the 4-hour. And I know it seems a lot to wait for. However, when you're backtesting your strategy, playing through those candles and being very consistent in your approach and the way that you trade, we often forget that actually this is just what we have backtested. It just takes a lot longer. Of course, in real time, it may sound cliche to materialize, but this is the fine element of trading. Those of you that are able to recreate your level of backtesting in the markets, for example, as I am, I'd say I'm quite a patient trader, but when price gets my areas, I have adapted my strategies and able to allow myself potentially to take trades potentially a little bit sooner rather than I should. For example, the position that was taken first thing in the morning around about 5:30 local time here in Milan. And also I have the more patient approach where I wait for a break of structure, wait for an order block to be created, and then wait for my entry criteria before executing. So as always, thank you all for your support across all the channels. I do appreciate it. I do see your messages. I do see your comments, all good and bad. And yes, I very much so do appreciate it. Take care in your trading journey. All the best for the rest of the week. And more than likely, you will hear from me soon. Take care. Charles.